Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 11th, 2025, and we're diving into the third quarter financial results of uniQure, a leading gene therapy company. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss uniQure's latest financial performance and strategic updates.
Revenue and profitability overview. Let's start with the financials. uniQure reported a revenue of $3.7 million for Q3 2025, up from $2.3 million in the same period last year. However, the net loss widened to $80.5 million. John, can you break down these numbers for us?
Certainly. The increase in revenue is primarily due to a $1.5 million rise in license revenues. However, the net loss has expanded significantly, driven by increased R&D expenses, which rose to $34.4 million, largely due to the preparation for the biologics license application for AMT-130. The EPS came in at 138 cents, reflecting these higher costs.
Strategic initiatives and clinical progress. uniQure has been making strides in its clinical programs, particularly with AMT-130 for Huntington's disease. Can you tell us more about their strategic initiatives and recent clinical progress?
uniQure announced positive top-line data from their Phase 1/2 study of AMT-130, showing a 75% slowing in disease progression. However, recent feedback from the FDA has introduced uncertainty regarding the timing of their BLA submission. On the financial side, they raised $323.7 million in a public offering, boosting their cash position to $694.2 million, which should fund operations into 2029.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of then 85 cents, but the actual EPS was 138. What does this discrepancy tell us about uniQure's financial health and market expectations?
The actual EPS missed the forecast by 53 cents, which is significant. This miss can be attributed to higher than expected R&D and SG&A expenses. It highlights the challenges uniQure faces in managing costs while advancing their clinical programs. The market may react negatively to this miss, but the long-term potential of their gene therapies could still attract investors.
Operational efficiencies and future outlook. Looking ahead, what operational efficiencies and future outlook can we expect from uniQure?
uniQure has increased its SG&A expenses to $19.4 million, partly due to preparations for potential commercialization of AMT-130. They've also refinanced their debt, extending it to 2030, which should help manage future cash flows. With cash reserves expected to last until 2029, they are well-positioned to continue their clinical trials, with more data expected from AMT-260 and AMT-191 in the first half of 2026.
Key takeaways. In summary, uniQure has shown promising clinical progress, particularly with AMT-130, despite financial challenges. Their strong cash position and strategic initiatives provide a solid foundation for future growth. Thank you for joining us, John.
Thank you. It's been a pleasure discussing uniQure's performance. They have a challenging road ahead, but their innovative therapies hold great potential.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on uniQure's performance in the comments below.